Hello everyone, I'm Mary and I have extensive experience in trading, making me your dedicated trader. I'm enthusiastic about sharing my knowledge with you all. If you wish to participate in trading sessions and receive signals, make sure to subscribe to Telegram channel. The link to it you can find in the description. Today we will examine both in theory and practice an old, reliable candlestick pattern called PPR. So subscribe to the channel so you do not miss anything. I'm very happy when I see new subscriptions to the channel. And now we will explore a simple and reliable candlestick pattern called PPR. This is a reversal pattern, meaning it can give us a hint about when the market will reverse and provide an opportunity to enter a trade at the best moment. Let's understand how this looks, because PPR is not widely known. I will also explain how to use it for both bullish and bearish trades with a high percentage of profitable trades. Let's consider a scenario where the chart indicates a downtrend at the moment. In general, the price is continuously decreasing and we can observe a few consecutive red candles. These three red candles follow each other, indicating a typical downtrend. Similar to any downtrend, this one concludes with the formation of a low point represented by the last red candle. This candle possesses shadows. The shadows are crucial for the PPR pattern, so I will highlight them. I will also highlight them on the other candles to make it more realistic. Although I haven't seen settings with white shadows before, let's go with it. So I have marked the shadows on all the candles. Now let's focus on the PPR pattern. The downtrend has come to an end and the market is reversing, forming a green candle. However, for it to be PPR pattern, this green candle must meet two conditions. Firstly, it should be of the opposite color. A downtrend reverses with a green candle, while an uptrend reverses with a red one. That's evident. The market reversal implies that after a decline, there is a rise. Therefore, after red candles, there should be a green one. The second condition for PPR is to confirm the strengths of buyers over sellers. To confirm PPR, the body of our green candle must close above the upper shadow of the last red candle. For clarity, I will mark the level of the maximum of the last red candle with a horizontal line. Here, a thick pink line indicates the maximum. You can see that the body of the green candle closed above the upper shadow of the last red candle. This formation is called PPR. It indicates that buyers have become stronger than they were in the previous candle. Consequently, the trend is changing. Sellers no longer have the strength to push the price down, so it's likely to go up. When we identify such a pattern, we can enter a position immediately after the PPR reversal candle closes. In this case, I would initiate a bullish trade. Similarly, if the price was consistently rising after the upward movement concluded with a red candle meeting the PPR condition, I would enter a bearish trade. In other words, this red candle should close below the lower shadow of the last green candle, confirming the PPR pattern and indicating a potential change in trend. The condition for a bearish PPR formation is for the red candle to close below the low of the last green candle. Specifically, the body of the red candle should close below the shadow of the green candle. I will mark this level with a line. In essence, if the candle closes below this level, it indicates a bearish PPR formation and we can enter a trade expecting a downward move. The purpose of such patterns is to identify market reversals and enter trades with minimal risk. They are straightforward and only require attentiveness to the chart and quick reactions. Now, let's search for trading opportunities using PPR pattern. So I will begin searching for the PPR pattern on the 5-minute time frame. This time frame is well suited for identifying reversals. I have switched to the 5-minute chart, and now I will scan the available currency pairs for PPR pattern and potential market reversals. For instance, on the Canadian dollar to Swiss franc currency pair, the PPR pattern has already formed and started to work. Observe. We have a green candle followed by a red candle whose body closed below the low of the preceding green candle. In essence, these two candles have formed the PPR pattern. One could potentially enter a bearish trade at this point. It is highly probable that the price will continue to fall, but it's advisable to switch to a lower time frame and find a precise entry point here. For example, you can enter from this level while the price approaches the PPR confirmation zone for a retest. Once the price reaches that level, I will initiate a bearish trade for $300 and a duration of 3 minutes. Now we wait. In summary, the chart continues its downward movement, preventing me from entering a trade. That's alright. We will continue our search until we find another PPR on the 5-minute time frame. On the Euro and Canadian dollar pair, a bullish PPR has formed, but the candles appear choppy. It's better to skip the situation as the market hasn't decided on its direction yet. Similarly, on Euro and British pound, a bullish PPR has formed. However, the market has already started to rise, and I missed the beginning of the move once again. Regardless, that's part of trading. There will always be other opportunities for profit if we miss the current one. The key is to stick to our strategy and avoid impulsive decisions. With just a few currency pairs left, they have a low payout percentage. However, on British pound and Canadian dollar, we observe a potentially interesting situation with a small sideways movement. In this red candle, if this red candle closes below the low of the green candle, it will form a regular PPR, presenting a trading opportunity. On British pound to Australian dollar, a PPR is also forming, which is promising. Additionally, on USD and Chinese yuan, we see a strong PPR formation with 2 consecutive PPRs forming. This provides an excellent confirmation of reversal, allowing us to enter the position promptly. With the bearish PPR formation complete, I will enter a bearish trade for 3 minutes. I'll switch to a lower time frame, such as 15 seconds, to monitor the trade closely and wait for result. Trade time has come to an end and I made profit of $147. Not bad. Now I'll continue to look for another trading opportunities. I'm currently on the Euro and Japanese yen currency pair and I've spotted PPR pattern forming. You can see the large green candle completely engulfing the previous red one. Therefore, I'll enter a bullish trade for $300 and a 3-minute expiration time frame. It's worth noting that the PPR pattern is also an engulfing pattern, as the lower and upper shadows of the green candle fully cover the shadows of the red candle. This indicates a strong signal for a market reversal and potential growth. With the body of the green candle closing above the high of the previous candle, I have several reasons to believe the market will respond and start rising, making it a suitable trade entry point. Now let's switch to a lower time frame and wait for trade results. The trade time has expired and I made profit of $216. While the price initially moved in the right direction, it later experienced correction. Nevertheless, I achieved profit. As you can see, the PPR pattern works without requiring complex trading knowledge. It only demands attentiveness to the chart and market dynamics. I want to express my heartfelt gratitude for your time and interest in watching this video. If you found it enjoyable, I would be extremely grateful if you could show your support by giving it a thumbs up. I also encourage you to subscribe to my YouTube channel and join my Telegram channel so that you can stay updated on my upcoming content. By being a part of our community, we can foster a sense of camaraderie and have more insightful discussions. Thank you for your support. Farewell.